How often do you catch up on the latest economic and business news? If you are, then you might have already observed that financial experts, economists, gurus, investors, and famous financial people are warning that a financial downturn or a major economic recession is happening. A perfect storm is coming for the US economy, according to Ray Dalio. As Elon Musk worries about the economy and his firm's big income loss, he has started the process of having widespread layoffs at his enterprises. As of now, the US job market, especially the tech space, is reeling under severe pressure as layoffs are announced each day. However, other experts such as Jeremy Grantham predict the stock market will see a mega bubble soon. Most Americans anticipate a recession, according to a recent poll. A financial cyclone is headed for the United States, and Jamie Dimon is warning investors to prepare for it, while Michael Burry has projected a giant multi-year slump for the US economy. The media's predictions that we're entering a severe recession are becoming increasingly widespread. Our purpose for this video is not to cause fear and panic among the investor population, but to provide useful information to those who want to live comfortably and perhaps even prosper amid the current economic downturn. I'm BB, the finance professor, and in this video, we'll go over several investment strategies that can help you weather the economic downturn and perhaps come out ahead. Please remember, this is not financial advice. Contents on Finance Professor channel are for educational and entertainment purposes only. To start, let's figure out what the heck the term recession means and what triggers them. An economic recession is defined as a severe, widespread, and persistent slump in economic activity, as defined by Investopedia. Many different economic theories have been proposed to explain recession. These hypotheses can be roughly characterized as economic, financial, psychological, or a mix of these factors. Researchers use the apex of the previous boom as a reference point to calculate the depth of the recession. Recessions can have a snowball effect, meaning that the resulting drop in GDP and employment rates continues to hurt the economy. For instance, if consumer demand is low, businesses may have to lay off workers, which in turn reduces consumers' disposable income and further dampens demand. Since the United States has had several significant recessions before, this is a rather typical occurrence. However, recessions have been less frequent in recent years and don't last as long. The most recent and shortest one on record occurred in February to April of 2020. However, there have been ones that lasted for years. NBER, or the National Bureau of Economic Research, the body responsible for declaring recessions, determines the starting and ending dates of recessions. It is typical for the economy to peak, then begin to decline. According to NBER statistics, the average US recession lasted roughly 17 months in the period from 1854 to 2020. However, they were significantly shorter in the post-World War period, where the typical recession only lasted for about 10 months. In a study published the same year in October, Raymond James's economic analyst concluded that the United States was not experiencing a recession. However, while meeting the strict definition of recession due to 2 consecutive quarters of negative growth, the investment advisor contends that the country is not in recession due to the many positive economic signs. The Federal Reserve System, sometimes known as the Fed, was established with a twin purpose to increase employment and maintain price stability, and it has the authority to take drastic measures to do so in the event of severe economic downturns. An interesting fact is that the Fed may utilize a variety of monetary policy measures to stave off a recession. The Fed can stimulate demand and boost the money supply through open market operations, or OMO, which includes quantitative easing, or QE, and the acquisition of other assets. The Federal Reserve Act is a crucial piece of legislation in maintaining economic stability, since it is among the most important laws influencing the development of the US financial system. In the days before the Federal Reserve, recessions occurred often, and economic expansions lasted for shorter periods of time. However, as a result of Fed policy, the current economic upswing has continued for longer than in prior years, and the number of recessionary years individuals will experience is lower. Let's figure out how to weather the economic storm that's coming. What steps can you take to make the most of the current downturn and boost your chances of a successful economic rebound when the next downturn arrives? Recessions are periods of overall economic deterioration, which can lead to widespread anxiety and unrest. Having some cash on hand is also important at this time. If a recession occurs and your income drops, you might default, according to Holger Mueller. That's why getting rid of your high-risk investments and replacing them with cold hard cash is the cautious and intelligent thing to do. How then do the wealthy and powerful in the financial sector continue to prosper even while the economy falters? Since times have been bad economically for his firm, Elon Musk, for example, has liquidated most of his Bitcoin holdings to optimize their cash position. Like businesses, people need to think about decreasing their exposure to risk and increasing their savings. Warren Buffett had almost $100 billion in the bank, just waiting for the right investment. Although prolonged price declines are uncommon outside of a severe economic downturn, it is prudent to invest during market downturns. Asset values always rise and fall over time. When Bitcoin was trading at almost $70,000, no one could have predicted that it would fall below $15,000. By 2022's conclusion, Bitcoin's price was predicted by experts to have reached $200,000 or more when the economy started to falter and the Fed began quantitative tightening. However, markets were confronted with a new reality, and collapses occurred across the board. It's easy to assume that a recession is a time for conservatism and hunkering down. Large and persistent discrepancies between market prices and the true worth of assets sometimes persist during a recession. Having some cash in hand gives you options in a tight financial situation. During economic downturns, when returns on assets are lower, investors are more likely to hold on to capital. Investors are avoiding riskier investments in favor of holding on to cash because cash is king during a recession. Financial risks pay off when the economy is doing well. Therefore, reducing your costs and hazardous investments as much as possible is a smart financial move in preparation for the next crisis. As a result, you'll have a lot of leeway to spend money again if the time is appropriate. Increasing your savings is another smart step with your money. You should have enough money saved up to the last for at least 6 months in case of any unexpected expenses. Given the current state of the economy, it is prudent to put away as much cash as possible in anticipation of the next downturn. Businesses have gone bankrupt in large numbers as a result of the recent economic downturn. People need to eat, therefore, keep in mind that they will work for free. Although no investment can be absolutely guaranteed to survive a recession, investing in a depressed economy can present a unique opportunity, and certain investments often fare better than others in such conditions. Investment in liquid assets and well-managed enterprises is the second prudent financial step to undertake during a recession. An investment is considered liquid if it can be quickly and readily turned into cash without suffering a significant loss in value. Cash, money market funds, and actively traded stock in a public company are all examples of liquid investments. You can become bankrupt in a matter of hours if you invest in highly hazardous assets like Bitcoin coins or FTX-type firms. For this reason, it is prudent to have an investment that is as liquid as blue-chip cash during a recession. A company's liquidity may be evaluated by looking at how well it can meet its immediate financial commitments. Investors and banks consider a company's liquidity when considering whether or not to make a loan or investment. Putting your money into companies with a healthy cash flow is a smart financial choice. The third strategy is to utilize the current economic downturn as an impetus to make astute choices as possible in order to enrich oneself. According to Vivian Tu, a recession is a great time to invest. Rather than dreading a downturn, embrace it as an opportunity to try something new and take advantage of these bargain investments. Profitable businesses often emerge from economic downturns. Author of Rich Dad, Poor Dad, Robert Kiyosaki, claims he became a millionaire amid the financial crisis of 2008 and 2009. Similarly, people might profit from the crisis by making strategic investments at the proper moment. These openings can help you increase your wealth, maintain or even increase your profitability and/or the size of your business or net worth at a time when many other businesses are either not growing or are shrinking. Asset values during a recession are often significantly detached from their true worth. During a recession, a person's assets may only be worth $10,000, but in the hands of the right person, the same item may be worth $100,000. Just like that, Robert Kiyosaki did this in 2008. Despite the current economic climate and the property market meltdown of 2008 to 2009, he spent $500 million in real estate. Consider the value of $500 million in light of today's global economy. To maintain cash flow, businesses may reduce prices or give discounts during a recession. As the economy declines, many small firms will need to preserve cash as they anticipate cash flow problems during the approaching crisis. Increasing your revenue from many sources is one viable option. Investment in one's own professional development can be especially fruitful during economic downturns. By being in control of your career and personal brand even under challenging circumstances, you may gain tremendous leverage and accelerate your professional advancement. There is a wide range in how firms of all sizes and types are affected by recessions. While a Fortune 500 corporation might be able to save money by reducing positions and getting better terms from suppliers, a small consulting firm can face cash flow concerns if clients delay paying bills. Investing is a delicate matter, and with the future so up in the air, it may be difficult to know what to do. Therefore, being cautious in one's thinking and behavior is the next best option during a recession. However, in most circumstances, doing nothing is the wisest option. Market declines are possible once more if a recession hits. You could think it's wise to get out of the market now, before it crashes. The future performance of the stock market is difficult to forecast, even for specialists. There's a danger the market may keep sliding and you lose more money if you don't cash out immediately. Another consideration is that the prices at which you purchase the identical investments you sell off may have dropped by the time you decide to reinvest. If you are already struggling to make ends meet due to your debt and the present economic climate, you have even more reason to eliminate your debt. Prior to a downturn, it's wise to pay off whatever debt you have, especially if it's a high interest or variable rate loan. Also, if you don't have a lot of financial cushion, it's perhaps even more crucial that you put money aside during times of economic instability. These are just a few options to consider as you plan for the next disaster. But remember that your situation is likely to be unique. For those of you who have been following along, thank you. If you like this video and want to learn more about the newest investment news, hot themes, and their possible effects on the stock market, subscribe to the Finance Professor channel. And if you want to be the first to know when we upload new videos, be sure you click the bell.